Welcome back to the channel. Great to have you with me. Subscribe, like the video, tell your friends and family, click the bell for notifications. You know the drill. I just enjoyed my second to last summer getaway in New England. The school year is about to get underway. Summer's coming to an end. The election is just 76 days away. Amazingly, in about 3 weeks, early voting starts in Pennsylvania and Minnesota. Incredible. Not a fan of early voting. The Democrats are in Chicago having a good time ignoring democracy, crowning a candidate who didn't receive a single vote and lying and projecting with every speaker. Still no interviews with the new Dem-Pres candidate. And she hasn't been attending the convention, even when Barack and Michelle were the keynote speakers last night. No Kamala. All right, enough of that. Just want to do a quick check on the U.S. economic data and markets for the week. The panic of 3 weeks ago hitting the Nikkei and spreading around the world and slamming the S&P and the Dow is now an afterthought. All is well, stocks are higher again. The panic. So either this is what happened. Either algorithms overreacted in both directions, or secretly, without telling anybody, the Bank of Japan and the Federal Reserve did their plunge protection thing. There's been no indication they did that, but the price action was just silly. Anyway, oil remains weak as global demand slows, led by the U.S. and China. Chinese economy is really slowing down. Gold is all-time highs again on the back of the Harris proposals on the economy. The U.S. dollar remains offered as the U.S. yield curve falls, though remains inverted. That is the yield curve that's inverted. It's a quiet week on the U.S. economic data front, though we have had some Fed speakers with little hints they are open to the possibility of an interest rate cut at their September meeting. No data on Monday or Tuesday. Today, Wednesday, as always, at 7 a.m., MBA mortgage applications for the week ending August 17th came out, down 10.1% against a jump of 16.8% in the prior week. 30-year mortgage rate is down to 6.5%. Holy cow. And home prices remain near all-time highs. So some refinancing for people who took some mortgages out above 7%, to be sure. That's it for today on data. You know, if you look at an economic calendar, and I recommend a great one at investing.com, economic calendar at investing.com, can filter it nicely, covers everything. I'm not tracking every possible data point that comes out for the economy. What I track are data points that tend to move markets. And so that's my kind of barometer. What data points move markets? And there's probably 30 or 32 that move markets regularly. And we get hundreds of data point information every month. Tomorrow, Thursday, we get initial unemployment claims data for the week ending the 17th of August. We get another look at housing with July existing home sales. And Friday, we get one more peek at housing with the release of July new home sales. We should see some weakness in new home sales, and existing home sales will probably be well near expectations. Not much to move on this week from a fundamental perspective. We got some Federal Reserve headlines to pay attention to. We have the Democrat convention headlines to pay attention to. Technical analysis, of course, looking for resistance and support levels will be a driver for trading. Other headlines will drive price action. Global headlines, Middle East, Ukraine, Russia, EU. Checking in on stocks, the S&P 500, trading at the time of this recording around 5,605, just 68 points from the all-time high set in July. Remember the panic in the world just 3 weeks ago? It's just incredible. Watch 5,585 below for support, and then below that 5,564. Resistance to the upside, well, that's going to be on you. This is where risk plays a big role here. We have the all-time high at 5,667. So if we test that again, will it break through, or will it be a strong resistance level? We haven't tested it since we made it, so I might recommend, if we touch that level again, initially selling that level. Be ready for a quick take back, though. Checking on interest rates on the U.S. yield curve, starting with the benchmark 10-year Treasury. Yield trading down to 3.81% at the lows of the year, and clearly pricing in a Fed rate cut in September. The bond market has done the Fed's work for them. Jerome Powell, chair of the Fed, don't do anything. The markets have moved rates the way you want it to go. Leave the federal funds rate alone. The U.S. yield curve remains inverted, with a 210 spread, a very common indicator to look at in the credit markets. The 2-year note against the 10-year bond, that spread between the yield on the 2-year and the 10-year is at 15 basis points. That's positive. So the 2-year is above the 10-year. The 2-year is trading right now at 3.96%. Checking on oil, West Texas Intermediate, NYMEX crude, trading at 73.53, approaching the lows from February. Again, on weak demand from the largest economies slowing down. Nat gas trading $2.17, well off the year's highs, but finding support down here, not close to the lows of the year. Gold is trading $2,543, a new all-time high. Happy days if you're a gold trader. Driven by the horrible economic policy proposed by Harris last week, ongoing inflation pressures, and uncertainty around the world. Check in on foreign exchange market, the U.S. dollar index, the basket of the world's currencies against the U.S. dollar, trading at a low of the year of 101.45, the low of the year, driven by falling interest rates here in the U.S. Longs, people who long the dollar being taken out, and economic proposals supported by Harris have been damaging to the dollar. We'll be bracing for headlines out of Jackson Hole. So what's Jackson Hole? Each year in August, the Federal Reserve, business leaders, and political leaders meet in Jackson Hole, Wyoming, to discuss the state of the economy and financial markets. Speculation on commentary being dovish on inflation is driving the U.S. dollar lower. By the way, which is good for us. Weaker dollar makes imports more expensive, our exports less expensive. Our trade balance can improve. All right, the quick check on markets. Haven't done it in a little over a week now. Don't forget to keep an eye on your headlines, economic data, political headlines, geopolitical headlines, foreign affairs headlines, Federal Reserve market official headlines. All right, that's all I have for you right now. Always try to buy American.